Good afternoon. Final stretch. It was some 20 years ago that Walter Wriston, the then CEO of Citibank, said information about money is probably more important than the money itself. And back then everyone thought, Walter, that guy, he's just a crazy old guy. But it turned out, of course, to be true. And I was talking recently to Ajay Banga, who's the CEO of MasterCard. And I said, so, what business are you in? It used to be a credit card company, right? And he says, no, we're a technology company, technology and information company. I wouldn't even think of us as being in the financial services industry. So the times they are changing. And we have a very interesting session this afternoon to start to explore this question about the transformation of financial services and the transformation of money. So to do that, we've got a great super guy from MasterCard, Kevin J. Stanton, and he's the president of MasterCard Advisors. And this is a business that MasterCard has, basically doing sophisticated data analytics, exploiting the huge wealth of information and data that they have. And they also do consulting as well. So let's get into this topic about how money and financial services are being transformed by technology. Please welcome Kevin Stanton.
Thank you for the introduction, Don, and good afternoon, everyone. Don, Anthony, again, thank you for having me here today. I hope everyone can find a seat. It is, however, a truly deep privilege to join you as one of the keynote speakers at this 18th World Congress on Information Technology. President Kennedy once described at a White House dinner for Nobel Prize winners as probably the greatest concentration of talent and genius this House has ever seen, except for perhaps the times when Thomas Jefferson ate alone. Now, I'm pretty sure Mr. Jefferson couldn't make it today, and I'm not aware of any Nobel Prize winners in the room today. However, you never know. After all, the World Congress has been able to assemble some great minds from Bill Gates to Bill Clinton since 1978. So hats off to the World Congress, and congratulations for the years of service it's provided. And again, for letting me speak to you today. As a proud sometime denizen of Ontario and sometime denizen of Prince Edward Island and the former president of MasterCard Canada, I'm a little biased when I say the WCIT has made an excellent choice in coming back to Canada, the true north, for a second time. And I hope to see a third time soon. Now, as Don told you, I'm the president of MasterCard Advisors, MasterCard's professional services arm, where we offer advanced analytics, consulting, and consumer engagement around the world. It's a tremendous opportunity, therefore, for me to talk to with more than 100 speakers and having access to 3,000 delegates, although they're not all in this room today, from 80 countries, no less. But it's not just the number of participants, it's the diversity of participants. It's a true cross-section of stakeholders in building our digital future. A cross-section that spans sectors, industries, and academic disciplines. I say that because in the 21st century, partnerships are and will continue to be the playing fields where the future of information, communications, and payments technology will be won. Not on an individual basis, as in centuries past, but as a larger global community. And the diversity at play here at the WCIT echoes what's occurring in the payments space. An ecosystem teeming with its own denizens, including banks, merchants, consumers, you may be surprised to hear governments, NGOs, utilities, and many, many more. So today, I want to talk to you about how that ecosystem model is essential to realizing both this conference's one vision for a global digital society, as well as the WCIT mission of fulfilling the promise of a digital age. and how this model is essential as those of us in the payment space chart a course toward a world beyond cash. Allow me to frame it in three ways. First, to set the scene, I'll talk to you about the new models and form factors for how we pay today and tomorrow, and how they require a shift in how global multinationals operate in the 21st century. Second, I'll talk to you about what a world beyond cash means, especially when you think about the costs of cash and the benefits of electronic payments. Here, I'll focus on governments, merchants, consumers, and financially underserved people. And then finally, I'll close it by bringing things full circle, and I'll talk about the promise of a world beyond cash. Let me get started with the way new models and form factors will require a shift in the way global multinationals operate in the 21st century. The entire business model for global multinationals is undergoing a tectonic shift. The days of zero-sum competition, where to win, I need somebody to lose, are becoming part of a bygone era. They're being replaced by a positive-sum competition model, where for me to win, you have to win too. That's how the future, the true potential of the future, will be driven. The world where a business could control the whole supply or value chain end to end is simply coming to a close. In 2012, the phrase, "no man is an island," is no longer just artful poetry. It's an organizing principle. If the financial crisis of 2008 taught us anything, and here I'll just pause and say, Canada really navigated that crisis masterfully, in no part because of two things. One, a very efficient electronic payment system, and two, a deeply understood, a government that deeply understood the meaning and power of interconnectedness. So, if the financial crisis taught us anything, it's that the world is more interconnected, more interdependent than ever, and that what happens in one corner of the world affects the other corners of the world. What happens in one industry affects multiple industries. The repercussions of that crisis are still being felt, but we're beginning to see the positive benefits of interconnectedness, and that's the point. Economies of scale are giving way to socio-political economies of scale as global enterprises are engaging with banks, governments, NGOs, utilities, telcos, and others in groundbreaking ways. In this century, the challenge for business is to engage not just markets, but societies, and to do so in a thoughtful way through partnerships that are profitable not just to one side, but to many sides. Not just economically, but governmentally, commercially, politically, culturally, educationally, socially, and otherwisely. Not just to do well, but to do good. Not just to meet the needs of consumers, but to meet the needs of citizens. And at the core of this emerging business model, a new world of commerce is being born, a new reality in how we buy and sell goods and services, all stemming from the powerful convergence of the physical and digital. This brings me to the second topic, which is the meaning of the world beyond cash, especially when you think about the cost of cash and the benefit of cash. Now, here I'll focus on governments, merchants, consumers, and the financially underserved, as I said. And to be clear, we're not just talking about an evolution in transactions, but a revolution in commerce. How we conduct it, who conducts it, and where it's conducted. I don't have to tell anyone here, it's a revolution that's every bit as important and fundamental as Gutenberg's printing press in the 1400s and the advent of the internet itself in the 1990s. Except today's innovations aren't only democratizing information, they're democratizing opportunity, affording more people from more countries more access to more financial tools and choices than ever before. It's an era of personal empowerment, something I assert is fundamental to the Canadian character, but not just Canadians. It's a movement governments are driving around the world at the national and municipal level, and many of those nations, which I'll cite in my remarks, are represented here today. Let's start with the world's largest economy, the U.S. It's already paying out Social Security and veterans benefits electronically. And by March 1st, 2013, receiving those benefits by paper check will no longer be an option. This all comes with a savings of over $1 billion for that government over the next decade. No more paying out $1 for every paper check when electronic transfers cost less than 10 cents. No more losses due to checks stolen from mailboxes or checks forged and cashed. Let's go to London. London's poised to become a cashless capital. This is because the number of electronic transactions could well overtake cash for consumer payments in the UK by 2025. In South Africa, it's very interesting. South Africa is distributing, also by March 2013, 10 million debit cards to social grant recipients across the country, allowing them, in many cases for the first time, to benefit from the security and convenience of using electronic payments for their purchases, at the same time avoiding high theft and crime risks associated with cash. All of this is expected to save that government more than $360 million over the next 5 years in just operational costs alone, not to mention the reduction in instances of identity fraud. If the benefit is electronic, the right recipients is guaranteed to receive the right amount of benefits, and very likely right on time. As part of an effort to crack down on tax evaders, the Italian government has decided that any payment above 1,000 euros has to be electronic. In Lagos, the Central Bank of Nigeria has instituted a new cash handling charge on daily withdrawals or cash deposits that exceed $3,000 US, specifically to deter the use of cash. And indeed, in Canada, the Harper government withdrew the penny as an efficiency measure. Then there's the cost of cash to GDP. There are a lot of studies on this, and none of them are definitive or conclusive, but the total cost of cash being discussed range from 0.5% to 1.5% of a country's GDP. We're not talking small numbers here when you consider large economies like the US, the UK, Europe, India, Brazil, Canada, you name it. In fact, it's estimated that by doing away with cash in Canada, the government's fiscal position could improve as a result of eliminating the underground economy by about 1% of GDP, or the equivalent of half of the federal government deficit during fiscal year 2010-2011. Electronic payments lead to less expensive, more efficient, more practical, more transparent, and more open government. Tax evasion and corruption become increasingly difficult propositions and, frankly, more expensive as we move away from cash. Less tax evasion means more tax revenue for governments, more services for citizens, and greater taxpayer savings. Estimates are that consumers spend more than $16 trillion every year using cash in the informal and black economies. In Europe, at least 2.1 trillion euros, or 20% of Europe's GDP, lies in the informal economy. Electronic payments help governments distribute benefits to recipients far more efficiently as well. Brazil's Bolsa Família social safety net program is projected to save the Brazilian government 75% of the administrative costs alone on that program by distributing its funds electronically. And of course, the Harper government is not only discontinuing the penny, Canada's Receiver General is eliminating government-issued checks by 2016, citing risks and the expenses associated with check cashing fees. Now, let's talk about the cost of cash and benefits of electronic payments to merchants. Cash requires employee attendance and interaction. It's that simple. If you're a merchant and you need cash, you need someone to count that cash. You also need someone to double count it because no merchant lets a single employee control his cash. Some merchants may decide they even need security systems. Then you need to take that cash to a bank and deposit it every day or almost every day in order to secure it. You also need change in your register drawer. And with cash, you have to factor in back office handling, reconciling, and transporting. Electronic payments also drive sales. and increased spend. As an example, when McDonald's began accepting credit card purchases, estimates are that the average purchase rose from $4.50 to $7. That's an increase of 56%. Electronic payments increase consumer access to products and services, especially online. And this is at a time when mobile payment transactions are expected to exceed $600 billion worldwide by 2016. And that's compared to this year, when that number will be $172 billion. I could go on, and I will give one more example, one of my favorite, and that's that in Canada, Air Canada and WestJet have both opted for cashless cabins because of the efficiencies associated with that decision. But as everyone here well knows, cash of the past is slowly giving way to payment form factors of the future. So let's talk about the cost of cash and benefits of electronic payments to consumers. Cash costs access to funds, access to pay for goods and services. That's especially critical for emergency expenditures and services like medical care, car repairs. Cash costs consumers peace of mind, especially when traveling. In the 21st century, securing travelers' checks, exchanging currency are no longer necessities for foreign travel. Cash costs convenience, especially when you consider that it offers absolutely no online functionality. Cash simply impedes participation in the global economy. When it comes to consumers, just the concept of electronic commerce has become almost redundant, as electronic payments are so embedded in our notion of consumer-driven cultures. That's especially true for a new generation of consumers who aren't really willing to stand around waiting for cash to be counted back to them, and who aren't really willing to fumble for a quarter to pay for parking. In fact, they don't even know a world where you pay a highway toll with cash and coin. Electronic payments offer consumers better budgeting tools by providing itemized purchasing records, facilitating tracking and budgeting of their spending, and regular payment schedules. Electronic payments are simply safer than cash. When cash is stolen, it's gone forever. Not so with electronic payments, which offer benefits like limited or zero liability. Through sheer scale and capacity, electronic payment networks are able to constantly monitor and scan for fraud and abuse. And in fact, without payments technology, you simply can't rent a car or stay in a hotel, buy something online, or get dreaded cash from the ATM. Window shopping online is wonderful, but one day you might actually want to make a purchase there. Not surprisingly, there's growing evidence showing that electronic payments support and boost household consumptions. In a study that covers 27 European countries from 1995 to 2009, it was estimated that every 1% of increase in electronic payments resulted in a 0.17% increase in household consumption in Eurozone countries and 0.24% increase in non-Eurozone countries. In Brazil, more dramatic. It's estimated that private consumption expenditure increased 2.3% between 2003 and 2008 as a result of an increase in electronic payments. That number in Australia, 2.5%, and here in Canada, 1.3%. Electronic payments open doors to the global economy for consumers and put them on an equal footing in terms of services and competition for their dollar. They provide security against fraud and abuse and deliver financial controls that help them manage their money. Finally, electronic payments help those on the lower rungs of the economic ladder. They not only offer an opportunity to bank on cards, as well as enter into the global economy, electronic payments equip those economically disenfranchised consumers with a way to avoid expensive check cashing fees and payday lenders. And this brings me to what a world beyond cash means for the financially underserved. Now, in Canada, this isn't such an issue. Financial inclusion is extraordinary here. In fact, Canada has one of the most banked records on earth, with a remarkable 99.5% of its population owning an account. Even the U.S. only comes in at 90%. But for the rest of the world, especially in emerging markets, it's an altogether different story, as much of the globe is still struggling with getting into the economic mainstream. Financial inclusion is really a way of saying is you don't have a few people grow and leave the rest of the world behind. You have to lift the population as a whole to a better life and a better quality of living. The populations I'm talking about are not small. They're 2.5 billion people, more than half of the world's adult population. These people lack access to credit, insurance, savings accounts, and other formal financial services. And nearly 2.4 of that 2.5 billion people live in developing countries. Think about that and then combine those figures with the fact that worldwide there are 4 billion mobile telephones, mobile telephones, but only 500,000 bank branches. And putting those together, it's pretty clear that mobile has an opportunity to be a real game changer here. Mobile, in fact, has seen its broadest success in sub-Saharan Africa, where 16% of adults reporting have said they've used a mobile phone in the past 12 months to pay bills or send or receive money. In Kenya, where I'm pleased to say MasterCard has been partnering with the central bank, the numbers are simply off the chart. Half of all mobile money transactions globally are taking place in Kenya. Their annual electronic transfers now total approximately $10 billion US. And more than 2/3 of Kenyan adults report that they've used a mobile phone for money transactions thanks to prepaid airtime and inexpensive and simple handheld units. But much of the world remains entrenched in cash-driven cultures where the unbanked or underbanked are often just one more natural disaster away from losing everything. And I hold out Mexico as an example. There, 70% of the country is unbanked. There, 65% of consumer bills are paid with cash at the biller's office, and where 27% are paid with cash at a bank branch or retail outlet. What those numbers don't tell you is just how hard it can be to travel to some of these outlets or branches, often by bus on challenging roads, not to mention the cost of lost time at work to do so. And that really brings me to my third topic, and one I'm very, very passionate about, and that's the promise of a world beyond cash. Because at the end of the day, innovations aren't great in and of themselves. They're great because of what they afford humanity. They're great because they matter to people. They're great because they enable us to achieve. The technologies I've spoken about that move us toward a world beyond cash matter because their outcome is a world where economic opportunity and access is further democratized. It's a world where those countries, in some continents in some cases, that have been for far too long on the economic periphery have begun to make financial inroads that just a generation ago would have been unthinkable. It's a world where crimes and fraud are more difficult to commit. It's a world that promotes transparency. It's a world that improves lives and empowers people. It's a world where we can do well and do good. It's a world not just beyond cash, but a world beyond our expectations, a world that resets what's possible, a world where the rising tide of technology, if we harness it right and if we work together, can lift more boats than ever before. Thank you, and enjoy the rest of the meeting.